as we talk about Apple, the chart doesn't look compelling.
That's right.
But there's got to be a case to be made one way or the other, or maybe not at all, right?
Maybe not at all. I think Apple's lost its identity, and that's our real thesis on the name. What used to be a growth stock grew revenues at 66% in 2011.
Sure, it was a juggernaut.
45% in 2012. Now projections are 15%. So way, down to earth, down into the stratosphere. Competitive threat from Samsung is real. They released their Galaxy S4 last week. This is a feature-rich phone. Software, hardware is all impressive. So Apple's losing some of its product leadership to Samsung. At the same time, Apple's got to question whether it wants to target the middle income consumer, exactly. And if it does so, how many people are going to switch from the high-end phones to the middle-end phones and therefore hurt Apple's margins in the process?
Well, let's talk about targeting, because it's not just about consumers, it's also about the investors as well. Apple, not a growth stock, not a value stock. It's stuck somewhere in limbo right now. What exactly would a perceived possible dividend increase mean for the stock?
Well, a dividend increase would be an obvious positive, but then it sort of transforms the image of Apple as a growth juggernaut. Does it want to be a value stock? Does it want to continue to trade at 10 times earnings as it is now, increase its dividend? Or does it want to invest in product and in growth?
So it sounds to me like you're saying Apple is struggling with identity one way or the other. That to me suggests it's going to be stuck in limbo for a while from a stock perspective as well. What's your options play on that?
That's right. So with that thesis in mind that Apple is stuck in the middle somewhere, we like selling options in general. We think a well-devised strangle sale, something out to June, maybe a 10% out of the money options is a great way to play it.
Oh, so a strangle, again, is selling a put and a call. Selling a strangle, selling a put and a call at the same time. You're collecting premium, and what you're hoping for is that the stock does not become volatile. It stays within that band. What's your strangle threshold here? You see the 375, 525.
That's right. So with Apple around $450 a share right here, we'd go about $75 out of the money in either direction. Sell a 525, 375 strangle. You're collecting about $11, so you're collecting about a 2.5% yield on a 3-month trade. Give yourself 19% cushion room in either direction, and we really don't see Apple breaking out that much in either direction.
So again, so your ultimate hope here is that between now and June, the stock doesn't move either 20% in either direction, one way or the other.
That's what we're banking on.
Perfect.